Today I want to talk about Palantir. And in this video, we're going to take a look at an article titled 3 Reasons to Sell Palantir Stock Right Now. I'm going to give my opinion on these reasons discussed in this article, as well as go over whether I think the stock is a buy, a hold, or a sell. So if you enjoy the video, drop a like down below, and if you want to see more videos like this one, make sure to subscribe. One thing we're going to go over in this article is the valuation around Palantir, and there is no denying that the stock price is more expensive than it was a year ago. We are looking at 172% gain for the stock over the course of the last year alone. And even on a year-to-date basis, the stock is up almost 40%. A lot of the run over the course of the last year has been around the hype in the AI sector, and Palantir is really capitalized on this. And this is the first point that this article jumps into, stating that the AI platform for Palantir is currently just hype. In the third quarter of last year, Palantir grew their revenue by 17% year over year. However, one thing that they did focus on is growing their commercial revenue, which increased at a rate of 37%. They had 600 pilots of their AIP product line. However, the stock was downgraded as AI hype by Jefferies. And this is all around the fact that their AI platform is still in its testing pilot phase, and there's no guarantee of future growth. And honestly, when I see those two things listed here, about 37% commercial revenue growth, as well as AI just being hype right now, they seem to contradict each other. Because when we're talking about who is most interested in this AIP technology, we are talking about commercial customers. That is the people and the industry that really wants to see this succeed because it can show an impact immediately on their businesses. When we're talking about AI technology for Palantir, this is the technology that they can put against business data and spit out decisions that should be made to improve your processes based off that data. And with AI, this becomes a lot easier to integrate, and you can make easier, high dollar value decisions at a lot faster pace. And this is growth that seems to be accelerating, as they showed in the fourth quarter that their US commercial revenue grew 70% year over year. So we're talking about an industry that appears to be kind of on the front end of what type of growth we could actually see. It'll be interesting to see over the next couple of quarters if this growth continues to increase, where we're seeing 70, 80, 90, 100% growth year over year, or if we'll start seeing that number kind of pull back slightly and maybe drop back down into the 30, 40% year over year growth. So in my opinion, if you're going to say that the growth around Palantir is all AI hype, you need to be confident in saying the same thing around the growth that we've seen from Nvidia. And honestly, Palantir may have a better growth prospect than Nvidia for the long term. This mainly has to do with a couple of things. The first being the fact that Nvidia already has a massive market cap. So for it to grow, it takes a lot more. For Palantir, they have a small market cap, so they have a lot more growth potential ahead of them. The second thing is that Palantir really has to get businesses into their ecosystem and comfortable with their software before those businesses are going to start spending larger and larger sums of money. And that can be difficult on the front end to build out that trust with customers. So personally, I don't see a whole lot of validity in the statement that Palantir is just an AI hype play. The second concern that they express in this article is around the financials behind Palantir, and more specifically, their stock-based compensation. In the fourth quarter, Palantir reported a stock-based compensation of $132.6 million. When you factor this into their adjusted operating profit margin of 34%, it actually drops that margin down to about 11%. So if you actually go into Palantir's earnings report, you can see where these numbers come from. So their stock-based compensation for the fourth quarter was $132.6 million. If we look a year ago, that number was $129 million. So there was a very slight increase year over year. So this shouldn't be a new concern concern. Any investor who has bought over the course of the last year should have been aware of the fact that Palantir issues stock-based compensation. The other important thing to note, right next to it, we can see the year-over-year change for the full year of 2023 versus the full year of 2022. When we look at 2022, they had $564.7 million of stock-based compensation for the full year. When we look at 2023, we can see that that number actually decreased by about $100 million to $475.9 million of stock-based compensation. What this tells me is that Palantir is focused on the right things over the long term. They are looking to lower their stock-based compensation year over year. When you first start off and you're a smaller company, you really need to offer stock-based compensation to attract the best talent in the market. And that is something that Palantir has had to do. But now, as they're growing the company and they're becoming profitable, they're focusing on lowering that number. And overall, in the long term, that is going to be a good thing. And on top of that, in Q2 of 2023, the board of directors authorized a stock repurchase program of $1 billion. This means that in the future, they can really start offsetting a lot of those stock-based compensation numbers. So yes, I don't love stock-based compensation, but I think that Palantir right now, because they're in the younger stages of their company, it's okay in the short term. They just need to show that they're in the right trajectory to start bringing some of those numbers down and not diluting shareholders. And the final point that this article brings up is around Palantir's valuation. They're calling it egregiously rich, sitting at a forward P ratio of 70.5. When we compare that to a company like Nvidia that is currently sitting at a 36.4, then Palantir does look quite expensive. We can see that on Yahoo Finance, they have Palantir's PE ratio currently sitting at a 68.97, and earnings projections right now for Palantir over the course of the next 2 years are anywhere from 29 cents all the way up to 45 cents. And when we use those EPS numbers of anywhere from 29 cents to 45 cents, we get a forward P ratio anywhere from 78.28 down to 50.44. And I think over the next few years, one of the most difficult things to understand about Palantir is where their earnings will head. I think that it depends a lot on macroeconomic conditions. When you think about the types of customers that Palantir is trying to target, the commercial customer base, that commercial customer is really only looking to develop some of these softwares and integrate them into their business if they can do it with relatively cheap money. And what I'm talking about there is interest rates. If we see interest rates drop in a major way, a lot of companies will look to expand their budgets and could look at Palantir as something to spend money on. However, if these businesses start seeing higher interest rates or interest rates really staying level with where they're at, that means that money is more expensive. And oftentimes what these companies will do is they'll look to restrict their budgets to mainly essentials until we can get to a lower environment for interest rates. So yes, I do think their valuation right now is fairly rich, but I think it's interesting to see how the next few years play out to really get an idea of whether Palantir is that overvalued, because they could have a lot of surprises. They could pull back on their stock-based compensation. We could start seeing interest rates dropping and a lot more businesses integrating Palantir's software, and that could really help drive up their earnings and offset some of this richer valuation that we're seeing from Palantir. So in my opinion, Palantir is a hold. I don't think it's a great company to sell just because of the chances that this company could take off. We could start seeing them deliver more and more profitability. We could see their commercial customer base expand even further, and I think that could all be impacted by the lowering of interest rates, as well as the valuation. As you see interest rates lower, valuations tend to increase as well. So that kind of helps offset some of this higher valuation that we're seeing from Palantir. I definitely wouldn't be buying either at these prices because we have seen the stock run up in a major way. If I were sitting on the sidelines wanting to get into Palantir, I would not be looking to build out a position right now. I would try and wait for it to maybe drop back into this kind of $15 to $16 range and then start picking up a few shares here and there and see if it would drop any further. I think the stock market in the short term could be very unpredictable and dependent on some of these macroeconomic conditions, and that could have a big effect on Palantir, and that could present a good buying opportunity. But right now, I wouldn't be buying. I would just be holding the shares if you have have any, and waiting to see kind of what unfolds over the next 1 to 2 and maybe even 3 years. But keep in mind, do not buy a company just because some random guy on YouTube talked about it. Make sure you are doing your own research and looking into companies that meet your risk tolerance as well as your time horizon. So I hope you enjoyed the video. If you did, drop a like down below. And if you want to see more videos like this one, make sure to subscribe. And as always, guys, have a wonderful rest of your day. And for the joke of the day, why did God create stock analysts? Check the comments down below for the answer.